Welcome back, everyone, to the next lesson. Today, we're going to continue expanding on our Ichimoku knowledge, so let's jump right in. First, let's talk about C-clamps for a minute. C-clamps are considered a counter-trend strategy. It is essentially Ichimoku's way of highlighting both overbought and oversold conditions. This will build upon our understanding of Kijun-sen and how price always wants to return back to the Kijun. Remember, in a trend that is out of equilibrium, price will be far away from the Kijun. Well, that also goes for Tenkan-sen. In a C-clamp formation, the Tenkan and Kijun will diverge from one another and form a C shape. This commonly suggests that the trend is overextended and needs a reversion to the mean before continuing or reversing. Now, I do want to say that it's important to note that not every C-clamp you see will automatically result in a reversion to the mean. C-clamps can draw out over many sessions, potentially even days or weeks before they resolve. Now, you'll learn through experience in journaling exactly how overextended a C-clamp can get before resolving itself. Now, let's take a look at what we mean when we say C-clamp. Since hindsight is always 20/20, take a second to look at this Ethereum chart. What do we notice? Well, first of all, we notice the C-clamp, right? Tenkan and Kijun have diverged. The Kijun-sen had flattened out right here, while the Tenkan kept trending downwards. This effectively created the curvature in the C-clamp formation. Now we notice that the Tenkan-sen also eventually flattened out here as well. Well, price continued to trend down all the way to around $83. Now looking at the chart alone, we can estimate that price is very far from equilibrium at the Kijun, right? The Kijun is nearly 80% away from the current price. Furthermore, we can visually notice just how overextended the trend seems to be based on the components of Ichimoku. I'm sure if you have overlaid some oscillators, you would notice the extremely low RSI, suggesting the asset is oversold. Well, this is Ichimoku's way of suggesting a bullish divergence here. Now take a guess at what happens next. That's right, price not only returns to the Tenkan, but all the way up to the Kijun. That is a prime example of a C-clamp resolving itself as well as an initial Kijun rejection. Now, do you see two ways you could have played this setup? First, you could have taken a long after the indecision candle or the doji. Maybe you had an invalidation below the previous day's low. Or maybe you even waited for that first impulse up to note that the trend was going to mean revert possibly. Either way, there was a clear counter-trend long to be taken. Secondly, you could have set some asks along the Kijun-sen. Just look at that initial rejection from the Kijun. That is definitely worth an intraday short, if not a swing short potentially. These are all things to consider, but I also want you to keep in mind the depletion factor here. That Kijun-sen wasn't tested for multiple weeks. So just as we learned in Course 3 for DBS and SSR zones, the depletion factor works similarly for most visualizations of support and resistance. The best and strongest reaction is always on that first test. Anyways, now that we have an understanding for C-clamps and how they relate to Kijun bounces or rejections, let's look at another nuance of Ichimoku. Let's talk about Kumo Pockets for a minute. Kumo Pockets are essentially areas within the Kumo or cloud that forms pockets. These pockets tend to have a high probability of rejecting price. Remember how I mentioned depletion factor? Well, the same principle applies here. The strongest rejection from a Kumo pocket will always be on that first test. The more a level or area gets tested, the weaker it becomes. Now, I've noticed that Kumo pockets work best in downtrends versus uptrends, but that's not to say they don't work in uptrends. This is just data I've gathered from experience and journaling. And again, it's important to note that Kumo pockets are just another way to visualize support and resistance, similar to our DBS and SSR zones. We want to be buyers at support and sellers at resistance. Kumo pockets can provide us fresh access points into the market. Now let's take a look at this chart here. This highlighted area represents the Kumo pocket. We'll notice it's really just an area where Senku span A went upwards before rolling over back down. It highlights an area of interest for price. Now let's see what happens as price came back into that level. We see price came all the way up to where Senku span A flattened out right before it rolled back over to the downside. This little pocket was essentially a clean resistance price happened to get rejected at on a retest. Now, I want you to start thinking about how you could potentially trade this pocket. You could have scattered asks throughout the pocket or just on the back end. You could have used the previous swing high as invalidation, or maybe even tighter depending on your strategy. Now, what do you set as a target? Is it a previous SR level? Or maybe it's just a trailing stop after the initial entry? This is where you start to think about what works for you as a trader. There is no right or wrong, but I just want to provide you a framework and set of tools you can think about incorporating if they resonate with you. Now let's take a look at what happened over the next several sessions. Price rejected and went on to set what looks like a double bottom. And what do we notice after that? Price came back into the pocket and rejected for a second time. This adds confluence to our understanding of depletion factor. The best reaction always happens on that first test. However, a second test can still provide a valid trade setup. It's important to keep that principle in mind as you look to incorporate discretionary setups into your arsenal of visual cues and structures. I'll leave it at that so you can start thinking of rules and potential strategies for incorporating these two nuances into your trading system. In the next video, we're going to take a look at my personal favorite trade setup, the edge to edge. Thanks for watching, and I'll see you soon.